There is a wave of panic right now over Vitalik Buterin's massive $44 million Ethereum transfer. But almost everyone is asking the wrong questions. Welcome to the generational wealth community, your pathway from knowledge to legacy. While the market is fixated on a potential price crash, the real story isn't about selling. It's about what this money is intended to build. Understanding that is the key to understanding what's next for Ethereum. You've likely seen the headlines declaring that Vitalik is dumping his bags and that Ethereum is tanking. Fear is definitely in the air. But what if this is the wrong perspective? What if this is actually one of the most bullish signals we've seen all year? We are about to dig into the on-chain data, cut straight through the noise, and show you what this strategic move truly means for the future of Ethereum. Let's begin with the confirmed facts. Near the end of January 2026, Vitalik announced he was moving 16,384 ETH, worth around $44 to $45 million, from his personal wallet. Now, here's the most crucial detail. On-chain data confirms those funds did not go to an exchange for a rapid fire sale. They went to a multi-signature wallet. In the days that followed, some of that ETH was sold off. We saw batches worth a few $1,000,000 at a time. But these sales were executed carefully to avoid shocking the market, using tools like Cow Protocol to break them into smaller, manageable swaps instead of one giant price-crushing dump. So even though Vitalik dumps ETH makes for a dramatic headline, the evidence on the blockchain tells a much smarter, more deliberate story. Of course, that didn't stop the market from reacting with fear. The timing felt particularly brutal. These sales happened as the entire crypto market was experiencing a significant downturn. With Ethereum's price falling sharply, the price dipped below $2,500 and was trading near $2,100 at the start of February. In fact, during this period, Ethereum's price dropped by nearly 30% in just 1 week. The crypto fear and greed index plunged into extreme fear, reflecting widespread panic. Technical analysts began pointing to bearish charts, warning that prices could drop toward the $1,800 to $1,900 range. To compound the issue, the sell-off triggered liquidations of more than $210 million worth of long ETH positions in a single day. When the founder of Ethereum himself is moving millions right in the middle of a market collapse, it's easy to understand why people were concerned. But this is precisely where the narrative takes a turn. This wasn't a panicked dump. It was a planned, pre-announced move to put capital to work. In his announcement, Vitalik explained that these funds were specifically for supporting the Ethereum Foundation and related projects during what he termed a period of mild austerity. He's not cashing out. He's reinvesting his own money back into the very heart of the ecosystem. And frankly, this is not new behavior for him. He has a well-known history of selling ETH to fund charities and public goods. It is his signature move. So if you are one of the people worried about this dump, it's time to look deeper. By the way, if you want to stay ahead of misleading narratives like this one, make sure you are subscribed. We focus on the data, not the drama. So where is this money actually going? Vitalik is using it to tackle some of the biggest challenges in cryptocurrency, privacy, and security. Specifically, he's funding the development of cutting-edge privacy technologies, like zero-knowledge proofs and secure hardware solutions. Think of it this way. Instead of chasing short-term price movements, he is strengthening the network's fundamental roots. He's investing in the essential plumbing that will make Ethereum stronger for years to come. He is funding the kind of critical infrastructure that large companies need, but are seldom willing to build themselves in the open-source world. The goal is a more private, more secure, and more scalable Ethereum for the long haul. This all comes at a time when Ethereum's focus is already shifting toward real-world use cases, like stablecoins and tokenized real-world assets, moving beyond speculative hype. So what is the ultimate takeaway? You have to separate the short-term noise from the long-term signal. In the short term, yes, the market is shaky. The price has taken a hit. And if the bearish pressure continues, those lower technical targets are still in play. But the long-term picture could not be more different. Vitalik's move isn't a dump. It is a strategic reinvestment into Ethereum's core technology. It is a powerful statement about a future focused on real utility and resilience, cementing ETH's role as the digital oil for a new tokenized economy. While specific price predictions are always difficult, This move reinforces a fundamentally bullish long-term outlook. The bottom line is this: don't let short-term fear shake you out of a long-term position. The real alpha is to watch the projects Vitalik is funding in the privacy and security space. Those are the building blocks for Ethereum's next major growth phase. While the rest of the market is panicking about a dump, Vitalik is busy planting the seeds for the next harvest. Subscribe for daily recaps, drop a comment on your biggest takeaway, and turn on notifications. We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Quick disclaimer: I'm not a licensed financial advisor. This is for educational purposes only, and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.